Futures on hold ahead of the most hype earnings report of the season. 30 minutes until the start of the cash trade. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, the countdown to NVIDIA is underway. The world's most valuable chipmaker reports after the bell this afternoon, with investors betting on another blowout quarter. And later tonight, NVIDIA CEO Jensen Huang joins Ed Ludlow for a special edition of Bloomberg Technology. Don't miss that exclusive sit-down at 6:30 p.m. Eastern. Plus, also keeping an eye on retail following a mixed bag of results from Kohl's, Foot Locker, and Abercrombie. Next hour, we'll get the view from the C-suite with Abercrombie CEO Fran Horowitz. Let's take a look at where markets are trading. Of course, about 30 minutes until the bells ring, you can see pretty flat overall. The S&P 500 currently down. You could call that 0.1%. I'll go ahead and call that unchanged. A little bit more on big tech, an emphasis on little there. Of course, everything could change tonight when NVIDIA does report those numbers. And you take a look at the bond market right now, absolute crickets, Sonali. 10-year Treasury yields camped out at about 382.
Well, some places where there are fewer crickets. Let's look at those individual stocks here. Pre-market movers on our radar. NVIDIA just moving modestly ahead of those earnings this afternoon. The chipmaker is a barometer for AI spending across much of the technology industry, and shares are up 160% this year. Abercrombie and Fitch posted net sales that beat estimates in the second quarter and raised its full-year outlook, yet you do have it down still more than 9%. We will dig into what's going on there. Foot Locker snapped 5 consecutive quarters of negative comparable sales, but progress in the company's turnaround plans wasn't enough to win over Wall Street. And you have Foot Locker shares pre-market down more than 8.8%, Katie.
And yeah, so you do have some movement under the hood, but I want to draw your attention to yesterday when S&P 500 turnover was just $61 billion. That is the second lowest total of this year, and really speaks to the fact that we're in summer. But finally, it's the most important day of our lives. We do have NVIDIA after the bell, and it feels like the entire market is waiting with bated breath. So let's get now to Seema Shah. She is Chief Global Strategist over at Principal Asset Management. And you think about where we are. We're between Jackson Hole, ahead, of course, of that August jobs report. We finally get NVIDIA earnings. How high are the stakes right now when it comes to sentiment?
Thanks for having me on. It is so high. When we've been doing, just like everyone else, we've been looking at the macro data, seeing if there's a slowdown underway, recession risk, etc. The thing that we keep coming back to is that although we feel confident about the general state of the economy, the other big risk out there is what happens to the big tech sector, and of course, NVIDIA. So let's say that today is a disappointing number, really takes away a lot of the very positive market sentiment, which has been driving technology and therefore the market. Then I think the market is going to be really challenged in terms of how much further they can go. I think sentiment could be fairly fundamentally damaged if, of course, it's repeated another quarter. So definitely all eyes on this evening's results.
Well, with that in mind, I mean, what are you expecting? We got a little bit of a preview from the Magnificent Seven, mid-July, early July, and there were some wobbles there. There were investors questioning what's the return on investment here on the billions of dollars that are being spent on AI CapEx. What's your base case here?
So our base case is that there's certainly room for disappointment. I mean, expectations are pretty lofty. We're trying to look at the big tech story in terms of a long-term strategic play. So, for example, even though valuations are pretty lofty, and as I said, there is definitely room for disappointment, we haven't really reduced our exposure. We're looking at, say, over a 6-month, 1 year, 2, 3-year horizon. Are these companies going to continue to deliver? Is AI still going to be that forefront of productivity and growth? And for us, the answer is a resounding yes, but we need to be willing to sit through some potential volatility and painful moments, I think.
When you think about the investor reaction we've seen so far in big tech and the really mixed feelings there have been around CapEx spending, how do you think about that in terms of what you want to see from NVIDIA? Can you afford them spending a little more to get ahead even further, even if that return doesn't come tomorrow?
I think the market is going to start getting really impatient. So I think that is one of the key concerns, is that impatience is starting to grow. And you almost need to see some kind of some clear delivery starting now. I think people's expectations have become a little bit more realistic as the quarters have gone on, but we're still not there yet. And as I said, that impatience is growing.
You think about the broadening story in the market as well. NVIDIA, you can see why it's such an important report today, how sentiment across the rest of the AI sector certainly hinges on today's report, as well as sentiment across the market. But at the same time, say NVIDIA doesn't hit every mark every investor wants it to hit. You kind of made this joke during the commercial break that it's being parsed as closely here as an FOMC report. And if it doesn't hit every mark, does it give more or less credence to the broadening story?
So I think, Sonali, this is the key question that we're all fighting with. We have expected to see a broadening out of the rally, more companies delivering stronger growth, earnings results. You're seeing that come through. So that is certainly keeping sentiment going. But we're also going into an economy which is slowing down, hopefully going to be avoiding recession. So I think, the challenges are growing. So if we then start to see some of these big tech companies really starting to disappoint, I don't know how strong investor sentiment can, or how strong it can remain in the face of that slowdown plus a disappointment. Now, I do think that things will bounce back. And I think that the recession will be avoided so that broadening the rally can be sustained. But we're not going to see anything like the gains that we saw in the first half of this year, certainly in 2023.
Well, let's talk about that a little bit more in the concept of a bull trap, of course, when the market attempts to break out to new highs, but ultimately tests that and then reverses lower. You have Michael O'Rourke from Jones Trading warning of that possibility on the terminal today. How high do you think the risk is? Like you said, there's risk of disappointment here when it comes to NVIDIA. Do you see a bull trap as likely when it comes to the broader market?
So I think the next couple of months are going to be really volatile. A lot of swings either way. I mean, it's just focusing on the macro data, even for the moment. We know that the market is going to pass through every single data point that comes from here. Is it recession? Is it not recession? So there's obviously volatility within there. There's also a lot of expectations built into what to expect from the Fed come September. So if they don't deliver a 50 basis point cut, then I think there's potential for disappointment. For us, what we're trying to do is we're saying, okay, look, the next 6 months are going to be difficult, but we need to try and take a longer term view of not just of the economy, of course, what is the Fed going to be doing, but also what is the big tech companies going to be doing? What is that growth story? Where is the productivity coming from? From that angle, we feel quite reassured, but I think you have to be ready that there's going to be some fairly uncomfortable moments coming up.
If you think about that potential for volatility, how much cash, Seema, do you keep on the sidelines to be able to prepare to pounce on any potential downturns?
So you want to be in some liquidity. I don't think cash is the right place to be. There's a lot of opportunities. We all talk a lot about equities, but within the fixed income space, you're already seeing a lot of flows into some of the longer duration stuff, the high quality credit, because those are the areas that should provide some kind of downside protection if the economy continues to slow down. So I don't think that you need to be in cash, but you definitely need to be liquid so that if you do get these moments of dislocation, just like we saw 2 weeks ago, that you have got the ability to pivot into areas which we think can continue to deliver some upside over the coming quarters.
Well, Seema, if it's not cash, where do you find that safety? Where do you find that liquidity, that place to put your dry powder in this market?
It's tough, right? But within fixed income, some of the more liquid parts of IG, even having some kind of exposure to treasuries on the longer duration side, something that will give you that movement. But of course, when you're looking across the asset allocation space, there's so many opportunities out there. You've got your equities, and not just in the US, but looking outside the US, some areas within Asia are also looking pretty interesting. Then within fixed income, as I said, IG credit, the high quality side is looking good. Preferred securities, even where you've got high quality and a pretty good return. And then even with alternatives, with rates coming down, you're likely to see REITs and areas like that continue to, or at least start to perform better. So I think it's important that investors look at the whole scope of things and say, cash isn't the only place. In fact, with the Fed starting to cut rates, there's probably some reinvestment risk. So they need to start deploying some of that firepower right now.
Seema, really quickly here also, what is your favorite trade in this market? To the extent that you are putting fresh money to work in a new trade, what is that trade?
So we think that actually we're not really shifting that much within our portfolios, even the last couple of weeks. I think it's about having that long-term strategy. But within your best ideas, I think somewhere areas such as preferred securities, which has got that exposure to financials, to utilities, that is getting that very, very risky, the less risky part of the market, and you're getting a high return. I think that to us is looking the most attractive right now.
Seema, thank you so much for your time. That is Principal Asset Management Chief Global Strategist Seema Shah on a very highly anticipated day of earnings for NVIDIA. I want to also now bring you some breaking news. We have now that Supermicro is going to be delaying their Form 10K filing for the full year of 2024. Remember, Supermicro is a firm now that has absolutely soared this year, but then just yesterday was targeted in a short selling report. The shares now down pre-market another 9.6% after a plunge yesterday of about 2.6%, Katie.
Yeah, we'll continue to follow that one. We do have some other breaking news as well, and that is that the CEO of Telegram has had his detention and he will be brought to court. This is according to a French official who also says that he will face a judge on possible charges. Remember, he was detained in France earlier this week, in the past week or so, stepping off of a private jet. And now we know that that detention period has ended and he will be brought to court. Sonali will continue to follow that one as well. Meanwhile, let's get a look at the stocks moving ahead of the opening bell. We're going to do that with Abigail Doolittle.
Despite the fact that we have futures down slightly, we have lots of big winners beneath the surface, including Ambarella. Shares are absolutely soaring. The company probably best known as a former Apple supplier, at least right now not a significant Apple supplier. Well, they put up a good quarter. Their guide is a big boost above what had been expected. And some analysts saying that AI and automotive could be very significant going forward for Ambarella. Turning to an internet apps software company, we have the shares of Box here up 5.2%. They put up a good beat, billing strong investors, analysts very supportive of this quarter. And then in the retail space, we have two companies doing really quite well here. Kohl's off of its highs, but up 0.8%. They lifted the full year view. Inventories have declined. Their profits beat. On the year, though, into today, down 32%, and significantly a 36% bearish short interest. So the bears not wanting to let this one go higher. And then Chewy up 1.8%, not because of the picture of a cartoon puppy, but they did put up an okay quarter, solid quarter. But there's evidence, importantly, according to some analysts, of stabilization within certain categories, plus profits equals Chewy up 1.7%.
Yeah, a busy day on the earnings front, of course, in this late July trading session. Abigail Doolittle, thank you. Now coming up, a number of retailers boosting their outlooks, but the stocks not rising in response. We'll take a closer look at the retail landscape next. This is Bloomberg.
And now to high interest, a look at what's making headlines around the world. HSBC's incoming CEO may cut layers of middle management, laying off a number of country heads across the global network. And it's the latest sign that Europe's largest bank is looking to rein in costs as central banks begin to cut interest rates, threatening margins of big global lenders like HSBC. The cuts are likely to be announced next month after the CEO is officially installed. And the U.S. special counsel investigating Donald Trump is pressing ahead with prosecuting the former president on charges of trying to overturn the 2020 election. This comes after the U.S. Supreme Court found Trump partially immune to prosecution related to his official acts as president. The move from special counsel Jack Smith's office will kick off a fresh round of legal wrangling between prosecutors and Trump's lawyers over whether the indictment can survive under the Supreme Court's more liberal definition of presidential immunity from criminal charges. And NFL owners voted to allow private equity firms to buy stakes in their franchises. It's a move expected to attract billions in fresh capital. Private equity can now own as much as 10% of a firm. It's a move that Mark Patrikoff, the founder of athlete investment platform Patrikoff Co., says was inevitable. We spoke with him just yesterday, just before the decision.
It's certainly going to change the game. And what individual wants to put up a $700 million check for a business where he will have no control, no path to ownership, et cetera? So institutional ownership was inevitable.
All right, and we do have some breaking news. This out of quant firm 2 Sigma. Their feuding founders will step down, hand reins to new CEOs. We're talking, of course, about John Overdeck and David Siegel stepping down from day-to-day management, of course, after clashing 4 years here. They will become co-chairman, still advise the $60 billion quant firm, but handing the reins over to Carter Lyons. He is a 13-year veteran of 2 Sigma, and former Lazard general counsel Scott Hoffman. They will both take over as co-CEOs on September 30th. Really interesting development, Sonali. Of course, we've been watching this feud unfold in public increasingly.
We certainly have, and it's interesting. They chose internal veteran here, Carter Lyons, and Scott Hoffman worked at Lazard for a long time before coming over. Interesting to take a lawyer and make them a co-CEO. You have to remember that this was a feud that was even made public to investors in regulatory filings, and a lot of that fight between Overdeck and Siegel was about how they managed, how they and others in the firm were compensated, and what their role would be. So it certainly turns a page of what's been a historic quantitative investment firm on Wall Street.
Yeah, you know it's real when you have to put it in a regulatory filing. Pretty interesting development here. Of course, we're going to unpack this later in the hour. Again, that is that the 2 Sigma feuding founders, they will step down, new CEOs taking over on September 30th. But let's get back to the earnings landscape because it's been a mixed bag this morning for retailers. Kohl's shares are climbing on a boosted profit outlook, but just so. Meanwhile, you take a look at Abercrombie beating on sales, not enough to impress investors, though, and Nordstrom reporting last night, offering an optimistic outlook, but still only about 0.1% gain in the pre-market. Let's unpack this all with Mary Ross Gilbert. She is senior retail analyst for Bloomberg Intelligence, joining us now. And I want to start with Abercrombie because it's down double digits in the pre-market despite beating on sales. Is this just Abercrombie being a victim of its own success when you think about how high expectations were for this stock?
Yeah, good morning, Katie. I think with Abercrombie, look, they're hitting it out of the ballpark, and we sort of expected that, and we think it's going to continue. So this company is able to continue to extend categories, and it's also a tale of different customers here. With Abercrombie, the 2 brands, which are Abercrombie and Fitch and Hollister, the household income is in that 100 to 150,000 range. So they're in a better income demographic. And the management here is so focused on delivering what this consumer wants. So as we know, of course, the wedding shop continues to be successful, and that's continuing in the fall because weddings are now year-round. Also, what the company did is they have their NFL line, and they keep extending it every year. So this is the 3rd year. It's been further extended to include sweaters and other items. And so that's also going to further boost the business. On Hollister, they have the collegiate line now across 32 colleges. So all of the things that they're doing with AUR, with average prices increasing, and even the promotional activity is pretty minimal. And so that is just showing this team is executing. They're delivering, you know, with double-digit comp increases on top of increases. I mean, that really shows there's a lot more to go here. And they said that there's a lot more expansion in the Americas, which is like 80% of the business. And then even overseas, they're really under-indexed overseas. So you can see that there's still a good runway here.
Mary, something I'm interested in is even though you're seeing such promise in the performance, you are still seeing the stock down pre-market more than 10%. Same goes for Foot Locker, where you see shares really dipping on the morning here, even though they're showing signs of progress. Is there something to be gleaned here on the bar that they have to meet to appease investors that are very worried about this sector?
It's a good question. I think when you see this kind of growth, it's sort of like with NVIDIA. When is this going to kind of be tamed, and is it going to be lessened? And so I think it could be short-lived, frankly. And I think, you know, once we start to get through the holidays and we see how that turns out to be, you know, we could see a different movement.
Mary Ross Gilbert of Bloomberg Intelligence, we thank you so very much for all of your analysis. Of course, a busy week of earnings and consumer earnings, even when you have NVIDIA this week. We're going to speak to next hour the CEO of Abercrombie and Fitch about those results, Katie.
Yeah, and coming up, shoppers are putting down the Twinkies as inflation takes a not-so-sweet bite out of discretionary income. We'll unpack in our Social Climber segment up next. This is Bloomberg. All right, it's time now for Social Climbers. The company's making waves this morning. And first up, James Smucker in an earnings jam. The maker of Jif peanut butter and Twinkies lowering its sales and earnings outlook for the year, with the company saying that sticky inflation was to blame for slowing sales in its sweets and baked goods category. Next up, at least one company is benefiting from the CrowdStrike outage. The cybersecurity company SentinelOne reporting stronger customer growth and second quarter profitability as CrowdStrike customers look to diversify their cyber risk. And finally, Foot Locker still feeling a step behind. The sneaker seller reporting sales that beat expectations thanks to a rekindled relationship with Nike, but the chain merely reiterated its sales guidance for the year, leaving investors unimpressed. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal, Sonali.
I'm going to take a check on futures as we wait for this market to open because it's been a choppy trade. If you think about it, we are down about 0.1% on the S&P 500 on light volumes. NASDAQ 100 down 0.2%. Ahead of that market open, Russell 2000 feeling a greater dip. We did see these bad feelings yesterday, too. It turned around. NVIDIA doesn't report until aftermarket, Katie.
Yeah, I feel like nothing matters, basically, until aftermarket today when we do get that NVIDIA report. There was a really interesting quote from Stuart Kaiser over at Citi in a Bloomberg News article this morning saying that basically NVIDIA stock, it's more than 25% above the lows earlier in the month, but the bar is pretty high, risk reward probably not great going into the print. However, even strong NVIDIA numbers and rate cut pricing won't be enough if payrolls are weak. So there's a really interesting line to tread here between the macro and between NVIDIA.
And the timing, right? Because even if you get NVIDIA today, say it's a blowout quarter and you get weak payrolls next Friday.
Yeah.
You saw how the market reacted the last time we got payrolls. Let's see if that kind of negative sentiment is still under the surface when we know a rate cut is coming. People might get a little more excited for that potential for 50 this time around.
Yeah, big time. And of course, added scrutiny on that payrolls print, given that we got those revision numbers and boy, were they big.
Boy, they were big. Now, coming up, we're going to talk to somebody who knows a little about this. That is Citizens JMP head Mark Lehmann joining the show with expectations for NVIDIA earnings, the IPO market, deals markets, and how rates will affect it all. This is Bloomberg.
Moments away from the start of trading, 23 seconds to be exact. This is Bloomberg Open Interest. I'm Katie Greifeld. Of course, we are counting down to NVIDIA after the bell. We've been counting down all week, and you really have been able to see that in volume. Of course, it's been light as a feather Tuesday and Monday and maybe Wednesday as well, given that NVIDIA reports after the bell. But you can see that we've been on a bit of a downdraft when it comes to markets. Of course, a lot of sentiment riding on NVIDIA, which reports after 4 p.m. today. You can see the bells are ringing now, right now. You can have Orion on the New York Stock Exchange. There's two of them. And then you take a look over at the NASDAQ, you have Guardant Health. But let's get a check on the major averages. Of course, 19 seconds into the trading day. Pretty much flat. As I said, the S&P 500, the NASDAQ 100 really in wait-and-see mode ahead of that big mega cap reporting after the bell. The Russell 2000, though, there's a clear direction there, and it's lower. The Russell 2000, those small caps, currently down about 0.4%. Meanwhile, there is more action under the hood right now. Let's take a look at Supermicro, which says that it may not file its annual 10K form for the fiscal year in time. Yesterday, remember that Hindenburg Research said that it's shorting the company on, quote, glaring accounting red flags. A spokesperson for Supermicro said that the company does not comment on rumors and speculation, but Sonali, obviously the market is commenting, with shares currently down about 11% pre-market.
Another stock here that the market is commenting on, even with positive results, Abercrombie and Fitch. It boosted its full-year forecast and beat on earnings per share, but the stock is lower as investors raise the bar for the retailer's outlook. Abercrombie's CEO joins at 10:30 a.m. Eastern to discuss those results, and at the open we have Abercrombie stock down almost 12%. And we can't ignore NVIDIA, of course, the big moment of the week. The $3 trillion chip maker will report after the bell with the potential to move the overall indices. The options market is implying swings of nearly 10% in either direction. You have NVIDIA roughly flat, down about 0.5%, or 0.5% really, before those results. Let's get a closer look here on what to expect with Bloomberg's Abigail Doolittle.
Yeah, a little bit of a calm before the potential storm, Sonali. If we take a look at NVIDIA on the year, this is the good news and the bad news. Up 158% at the highs on the year, at one point up more than 180%. So the question is has the stock gone too far too fast? Is it priced to perfection, especially when you compare it to the stocks, up just 23% relative to that up 158% over the last roughly 8 months? Now, something that I think investors need to pay attention to is the growth. Now, the growth is tremendous. Of course, that's why this stock has gone so high, so far, so fast, having to do with the AI craze. But take a look at the April quarter. The sales growth on a year-over-year basis, 262%, really incredible. Now, this quarter, it's 114%, also incredible. But look at that sequential decline. Are investors thinking about this? Even if they beat in a big way, there's still going to be a big sequential decline in growth. This quarter for profits, up 156% for any other company, really incredible, and still incredible for this company. But last quarter, the year-over-year growth, almost 600%. So again, even if they beat in a big way, there's still going to be a sequential decline in growth. I'm not sure investors are paying attention to this. It reminds me of Apple, what happens to their numbers in some ways, and all of a sudden folks are very surprised. If we take a look at the chart of NVIDIA, something interesting is happening from a real near-term perspective. This chart is a little ugly, so I don't like it from an aesthetic standpoint, but the messaging is important. Back in June, when the stock started to reverse a little bit, you can see the near-term uptrend. Again, a trend line is not to show the trend. You can see that it's to show the reversal. We came out of highly overbought territory over the last couple of days. The near-term out of that July dip uptrend is reversing, and you can see the RSI. It's actually flatline, Katie. Investors are really not sure what to make of this quarter, these numbers, the guide. It's really going to be crucial and very interesting to see what they in fact do put up.
Well, I like that chart. I think it tells a good message, but I respect that you respect aesthetics. Abigail Doolittle, thank you so much. Let's keep this conversation going with Mark Lehmann. He is head of Citizens JMP Securities. And you think about where NVIDIA is trading right now. We did have that wobble midway through summer, that big drawdown when it came to shares. Now we're up 25% from those lows. What does positioning look like in NVIDIA right now, and how do you expect those dynamics to play out after the bell today?
I think it's amazing how many eyes are on this, obviously, late summer going into Labor Day. I do think there's been a little bit of a shift from the institutional perspective. Some of the people who got overweighted the stock because of the ascent of the stock, my guess is it's probably curtailed some of their holdings going into the print today. And I think they've moved some things around. This has been a quarter where the Magnificent Seven has diverged, where you've seen some unbelievable performances by some stocks and some muted performances by some stocks. And I would expect NVIDIA to have a terrific quarter. And obviously sentiment will be interesting today and tomorrow, but more importantly, when we get back after Labor Day, how people position themselves for the third quarter will be also as interesting. Because again, we don't have a full house this week. There's a lot of people who are not in this week. So that's something to pay attention to as well.
Yeah, we are painfully aware of that fact that almost everyone's on vacation right now. Of course, could make for some very interesting trading when we do get those numbers. But you think about really the interplay between the macro and the micro, specifically when it comes to NVIDIA. Sonali and I were talking about this just a few minutes ago, because NVIDIA is really kind of being placed in as much importance as a Fed meeting right now. What do you think the real driver of this market is?
I thought my anniversary, which is today, was the most important thing. I guess I'm wrong.
Happy
I think
anniversary.
It is NVIDIA's earnings. Well, thank you for that. I think the macro backdrop is obviously more important. Maybe not tomorrow, maybe not the next couple days. I think the macro is as important. We have a Fed cut coming next month. We have an economy that's clearly doing fine but slowing. We have an election that's going to have a lot of rhetoric over the next 75 days. I mean, there's a lot being thrown at the market. So I don't want to pay too much attention at this print. It is important. We're going to get some other big tech prints that are also as important. But the macro backdrop is equally as important. And I think we've learned over the last few weeks and months that it's slowing down, but the consumer is still doing just fine. And I think at Citizens, we're seeing that as well. We're going to be busy after Labor Day because I think there's plenty of things that are going on in the capital markets. And I think that's more important, frankly, than just one print. But let's not forget, NVIDIA's got every eyeball on it today, and for good reason.
To that end as well, what do you think the narrative is going into this latter part of the year? If you think the consumer is still strong, if you see any signs of weakness, if you worry about growth, can that really sustain positive momentum and even the AI story at this juncture, knowing where valuations have gone over the past year and knowing that even AI is a sector that's sensitive to economic downturns?
I think it's exactly the right point, which is when you have a slowing economy, albeit not slow, and you have a lot of themes that have played out to great expectations over the last couple of years, what do you want to pay for those companies, or what are you willing to pay for those stocks? And I think we're also learning that great performance, great management, great execution gets overvalued in this market. Like we all said, NVIDIA was kind of a meaningless company for a very long time. And I've said it before, when I started, Intel was everything. Intel Inside, Wintel Monopoly. Now we don't even talk about Intel. So I think it's a lesson that individual stocks can outperform even when an economy is slowing. And maybe that backdrop will continue through the fall. And investors have to take a wider lens, because just buying 7 companies and 7 stocks is probably not a great idea.
Well, to that end, also, you kind of mentioned here this idea that things are going to be getting interesting in the capital markets coming out of Labor Day. And I'm sure a lot of investors and a lot of bankers out there, Mark, sure hope so. We've been talking a lot on this program over the last week on how that IPO window is pretty short here, particularly when you think about the uncertainty around the November U.S. election. How many IPOs are in your pipeline right now, and what does the demand really look like for them?
We're tracking on several IPOs in a variety of sectors, whether it's technology or insurance or financial services. People want to talk about technology IPOs generally, because that seems to be the loudest noise when it comes to investors, and particularly institutional as well as retail investors. I think that pipeline, albeit full, will be muted when it comes to IPOs for the rest of the year. I had expected, with the performance of some of the names that we've been on here at Citizens, whether it's Reddit or Oddity or some other companies that have done extremely well in the public markets, there would be more demand from investors that would push the sellers. The institutions would be buying them. Some of the issuers have to put some companies in the public markets. That has not happened. I have not seen a period in my 30 years on Wall Street where there's more demand and the supply, frankly, is just muted. So I believe that's going to be a 2025 event. That being said, if there's some people who test the markets in the 3rd and 4th quarter, I think the reception, if the numbers are where they need to be, will be extraordinary. And we've seen that, like I said, at Reddit, which is less than 6 months as a public company, but has executed as the public company, and people are paying them for that.
So looking forward to a big 2025, at least bigger relative to recent history when it comes to the IPO landscape. But Mark, do you think that something has fundamentally shifted when it comes to how companies consider going public? I mean, there's a conversation out there, a line of thought that with all of this access to private credit, private equity, et cetera, the companies don't need to go public in the same way that they did in past decades to get access to that funding. And maybe for that reason, you're going to see just lower IPO volumes in general going forward. What do you make of that argument?
I think a couple things have weighed on the markets. One is we had a big window in 2020 and 21. Secondly, we had a lot of SPACs that went public via companies that were frankly younger, less seasoned, that went public via SPACs, that in 2 or 3 years' time probably would have been more capable of being successful public companies. Thirdly, the private capital that you describe has become somewhat infinite. And lastly, I think there's a perception that you have to be a certain size to get public, and that institutions will not pay attention unless you have a certain metric. That's been proffered by a lot of the larger investment banks. I think that's not all true. I think there is a supply-demand imbalance where some of the portfolio managers would like to see those companies. They're willing to make earlier bets on those companies if they have the metrics that they want. So all four factors, and I always say it's hard to disprove a negative, and the negative is unless you have 500 million in revenue, unless you've kind of pre-sold the IPO, you can't go public. I don't believe that's true, but that has been playing out. So I think the IPO window will be shut for a little while. I've heard about the death of the IPO for 30 years, and that's just not going to happen. I think those companies are going to go public. They're going to be successful. We need liquidity for the insiders and others who have been invested in these companies for a very long time. And that will happen starting in 2025 and beyond.
Mark, we thank you so much. That is Mark Lehmann of Citizens JMP. And we want to bring you some breaking news as well, because you have Berkshire Hathaway's stock not only reaching a record high, but also topping $1 trillion in value for the first time. This stock has been on a 5-day winning streak. And of course, it's very interesting to see Berkshire, both Class A and Class B, of course, rising to the tune of 0.7% today. But again, on that 5-day winning streak and gaining today as the broader market faces some weakness. Also, Berkshire, in other news, selling some more of its Bank of America stock, has been all summer, really. But investors flocking to some safety in Berkshire Hathaway. Stick with us. This is Bloomberg.
All right, it's time now for our top calls. Some of the analyst action in focus this morning. And first up, HSBC says that Moderna is no longer a sell, upgrading the pharma giant to a hold, saying that the cancer vaccine program is showing great potential as a future revenue stream. Next up, Citi says Gannett is a sell. The media company announced it had agreed to a large refinancing earlier this week. And while Citi thinks that it was a, quote, smart transaction, the analyst says that Wall Street is overvaluing the deal. And finally, Raymond James says that Spire Global is no longer a buy, downgrading the satellite company to a market perform. The downgrade comes as the company announced that it is not in compliance with the NYSE's listing standards and that it will have to restate its historical financials after an accounting review, Sonali.
And Supermicro saying it will delay the filing of its annual report for the fiscal year ending on June 30th. Remember, yesterday, the short seller Hindenburg Research announced a short in the company because of, quote, glaring accounting red flags. Here with more on this story is Woo Jin Ho, a hardware analyst at Bloomberg Intelligence, who just this morning wrote that this filing delay suggests governance risks. At the end of the day, how do you pair kind of these moves by the company with what Hindenburg is suggesting? We do have Supermicro saying that they don't comment on rumors or speculation here. So what exactly is going on with the company in your analysis?
I will tell you it's no longer a rumor or speculation if you're delaying your 10K filing. To be frank, Sonali, I will say that it seems that Hindenburg did flag some corporate governance risk. It turns out to be some truth to that. And the disappointing thing to me here is they did list Supermicro delisted from the NASDAQ for principally the similar reasons. So one would have thought that they would have cleaned that up by now. And then for them to delay the filing once again in the span of 5 years is quite disappointing.
And where do you think this story goes? Like you said, maybe not exactly quite speculation anymore if they are delaying the filing, or that they could. I mean, how do they recover from this? Is delaying a filing enough? Are they going to have to reorganize the C-suite? What do you think happens here?
Well, I will tell you there are some related party issues that's been put out on the risk profile within the 10K filings and the 10Q filings. They do need to clean some of that up in terms of the related party issues. But it's still unclear if we're going to see a restatement or changes. It just might be operational in nature. If that's going to be the case, they probably have to add in some financial controls, and that's just more money on the G&A line.
All right, Woo Jin Ho of Bloomberg Intelligence, really appreciate you stopping by, of course, to break down the latest on Supermicro Computer. You can shares absolutely in free fall right now, down about 19%. But let's check in on some other movers today after earnings, specifically when it comes to your retailers. An interesting dynamic, of course, where you have some of these names beating on expectations, but it's just not enough for shareholders. That is absolutely clear when you take a look at Abercrombie. Shares currently down 13%, but up by more than 200% over the last year. You take a look at Foot Locker as well, down 15%. And then we do have some good news, thankfully. You take a look at Kohl's and Nordstrom managing to escape that crucible. Shares up between 4 and 5% for both of those names, Sonali.
And coming up, Katie, we're going to talk about one of the hottest stories of today. Two Sigma's feuding founders stepped down after many months of infighting. New CEOs named. More on that next in today's Wall Street Beat. This is Bloomberg. Time now for the Wall Street Beat. The billionaire founders of Two Sigma, John Overdeck and David Siegel, they're stepping down now after feuding for years. We're going to get the scoop with Bloomberg hedge fund reporter Hema Parmar, who was all over this story this morning and all over it through the course of the feud. How much certainty does this bring investors now that the page is turned at really what's been a historic quantitative investment fund on Wall Street?
Yes, this is a giant fund, $60 billion firm, quant pioneer, and this is the biggest management change in its 23-year history. So it does bring a pretty significant move, especially given the history of these two founders that have been feuding for many years. So new two co-CEOs, providing perhaps more stability, more assurance to investors that the people at the very top can collaborate and work together.
It was interesting to see this, of course, on the week where the Oasis news came out, that they're reuniting, but now you have these two founders splitting apart. Before we move on to who the actual new CEOs are, what were they disagreeing over so passionately that it had to be disclosed in regulatory filings?
Precisely. A very strange move for any hedge fund, let alone Two Sigma, which is known for being quite secretive, to disclose in a regulatory filing that the disagreements between their two co-founders was a material risk. So they were disagreeing over things like the organizational structure, succession planning, the roles of senior executives at the firm. It got to such a point that employees struggled to implement initiatives. It impacted or could impact the ability to retain talent.
You know, one thing that's interesting was the choice of the new CEOs. We were talking about that transition. One is somebody who's been there for more than a decade, Carter Lyons. I remember interviewing him a couple years ago at Milken. He was someone they put in front of an audience, certainly. Scott Hoffman, the general counsel of Lazard for decades, a lawyer being named a co-CEO. What does this say about their direction moving forward?
Yes, it's interesting. One person internal as a veteran, one person external to the firm, also a veteran, 30 years at Lazard. So, you know, it suggests perhaps they're looking for a little bit of new blood with a new voice externally. They want to keep some internal tenure and talent, and that they have two people sharing the role similar to the two CEOs that were previously there.
And it's interesting, you take a look at Two Sigma's absolute return enhanced fund gaining 10.6% in the first half of the year. The flagship fund returned 6.1%. So not too bad, maybe not exactly beating the S&P 500, but how much of a distraction had this feud become? How much was it actually impacting the day-to-day over at Two Sigma?
So that's what's really interesting, is that the performance is not bad, and it hasn't really impacted redemptions. So investors may not be thrilled with the fact that the two CEOs don't get along, but it hasn't impacted them such to the point where they would ask for their cash back. And that may be because a firm like this versus a single strategy fundamental equities shop. This type of firm with a quant pioneer is almost, it can run kind of on its own. It's very quantitative. It doesn't rely so much necessarily on like one PM at the very, very top.
That's pretty funny. So just let the computers do the work while the founders fight. Hema, great reporting as always. Our thanks to Bloomberg's hedge fund reporter, Hema Parmar. Meanwhile, let's get to the trading diary. What you need to be watching this week. And surprise, today we get NVIDIA earnings after the bell. We'll also hear from Atlanta Fed President Raphael Bostic tonight. Tomorrow we get earnings from Best Buy and Dollar General before the bell. We also get initial jobless claims. And then on Friday, another big event, of course, we get July's PCE inflation data. Now, coming up in the next hour, Sarah Hunt from Alpine Saxon Woods joins us on a busy earnings day. We'll also speak to Abercrombie CEO Fran Horowitz. All that and more coming up. This is Bloomberg. Minutes into the U.S. trading day. Welcome to Bloomberg Open Interest. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today. And coming up, the countdown to NVIDIA underway. The world's most valuable chip maker reports earnings after the bell, with investors betting on another blowout quarter. And later tonight, NVIDIA CEO Jensen Huang joins Ed Ludlow for a special edition of Bloomberg Technology. Don't miss that exclusive at 6:30 p.m. Eastern. Plus, a mixed bag for retailers. Abercrombie's sales beat, but it wasn't enough to impress investors. We're going to speak with CEO Fran Horowitz later this hour on how she may raise the bar. Katie.
Meanwhile, we take a look at markets. Of course, 30 minutes into the cash trade, you can see not too pretty. The S&P 500 down 0.2%. Big tech extending losses ahead of the big dance after the bell today. The Nasdaq 100 down about 0.6%. The bond market pretty quiet right now. Yields up just 1 basis point on the 10-year. Meanwhile, NVIDIA earnings obviously center stage today. Here's what Wedbush's Dan Ives had to say. He said basically Jerome Powell did his part last week, but now the market needs a big piece of the puzzle today for tech stocks to go higher into year end. We believe this is the most important earnings report for the stock market this year and potentially in years for the street, as NVIDIA will be the earnings report heard around the world. So Dan Ives with the pomp and circumstance as usual. Joining us now at the desk, I am thrilled to say we have Sarah Hunt. She is partner and chief market strategist over at Alpine Saxon Woods. Great to see you in person.
Good morning. Good to see you too.
So Dan Ives set the stage for us. It's interesting to me that for all the talk of the rotation, the broadening out in earnings, that was really the buzzy topic about a month ago, we're still so singularly focused on this single stock.
Well, we're so singularly focused on the idea that we have a big new technology wave that's going to lift productivity and all sorts of things for a longer period of time, right? Because this is not just a story about NVIDIA, but right now it is a story about NVIDIA because it's the CapEx that's coming that is supposed to be the wave that is going to end up being, again, productivity enhancing for not just the technology space, but for everybody else. So it's really key to make sure that that spending still continues. And that's always, I mean, NVIDIA has been the most important earnings every quarter for how many quarters now?
And what are you expecting? Because we think about what we heard from the big tech giants about a month ago, mid-July, Microsoft in particular, really spending just billions of dollars, still funneling all that money into that AI spend. And NVIDIA obviously is one of the big beneficiaries of that. Is that what we should expect to see after the bell today?
I think we should expect to see that. You still see the spending coming out of not just Microsoft, but all the hyperscalers and Meta as well. And you're also looking at, there was questions about, was Blackwell delayed, what's going on? You want to hear what the commentary is going forward, because it's going to be important what the numbers are, and they better be better than the numbers that are consensus, but it's also going to be important what he says about what's coming into the next 6 months and the next year, because what needs to keep happening is you need that spend to keep continuing and the reason to spend, because you've got a better chip and a faster chip, and then you need to start seeing some infilling where it's not just the hyperscalers that are buying, but you're starting to see other companies as well on that big CapEx push.
Sarah, is NVIDIA a trade or an investment? And the reason I ask this is because of how far valuations have run. Why would you buy NVIDIA at these valuations? Why wouldn't you just wait until you can get it at a better spot, perhaps?
So I think it is an investment because I think, you know, the fact that earnings revisions have continued to go higher, the fact that the company is also continuing to innovate and shortening that innovation cycle, and the fact that we are now trying to find other use cases besides just the CapEx side. I think it is an investment. The question's really going to be when you have a lag in between the CapEx spending that's coming and what people are going to be doing with it. And I think that Walmart was it was very good to see that Walmart had things to say about how AI is driving business and is making margins better and is doing good things for their business. You need to hear more of that commentary. So there may be a point at which that CapEx spends. It's probably going to happen at some point. I don't know if that's the right time to wait for NVIDIA, because every time you wanted to wait, it hasn't been the right choice.
Well, it's fascinating. If you think it's an investment, then what are some of the longer-term structural challenges? I think about this AI boom and the need for data centers, for power and energy to really power those data centers. Perhaps regulation coming in and creating roadblocks along the way, geopolitical conflict. It just seems like there's a lot ahead of this story that perhaps is not baked into the valuation today.
So I'll take the other side of that and say that what technology has been very good at is saying, okay, if I need X amount of power to run this chip, I can do that with half X, right? So there's an innovation cycle that's going on the other side. So when people extrapolate the current needs for electricity and for demand, you have to look at the fact that over time, we've also been able to make things more efficient. So the question, there's going to be a lot of tensions in there, and yes, there may be opportunities within some of those tensions, but I think at the moment, that story is still very strong.
And I want to talk about AI hardware versus AI software, because in addition to NVIDIA after the bell, of course, we have Salesforce reporting as well. A lot of pressure on that stock, that company, to step up and show some sort of return on investment. What are you thinking when it comes to that investing timeline? Are we at the point where, you know, investors should also be looking at potential users of AI, or is this still a hardware story?
Well, I think that's the gap that I was sort of talking about, which is the use case between, okay, we've got this incredible engine and it can do X number of things. How do we practically put that into use? And I think that one of the reasons that Salesforce had some issues with a couple of prior earnings reports is because they weren't necessarily able to demonstrate that that was helpful to their business. And I think that we need to see companies demonstrating that the AI is helpful to continue that the whole ecosystem, the whole infrastructure can continue to move the ecosystem. So I think that it's very important to see those use cases and how they come out. And I think that for the companies that were sort of left in the middle of, there's this great technology, I'm not sure how to use it yet, we need to see something happen there.
Fascinating. After market today, there's NVIDIA, but there really are a host of other companies, CrowdStrike being among them. Katie, interesting. You know, Sarah, at the end of the day, what else are you looking at here? We've had a lot of information this earnings season, and we're almost done. We're almost there. But then you are complicating life a little further when you see the jobs report at the end of next week. And so when you take all this data and information together, how are you recalibrating? Where are the new bets?
Well, if you take a look at how just the narrative has shifted over the last, couple of months, the beginning of this month and the end of July was a total downdraft, and all of a sudden we were going into a recession, and the Fed had to emergency cut 50 basis points, not an intermeeting cut. And now all of a sudden we're back to, no, never mind, it's all okay. I think that you have a lot of things that we cannot control, and that makes investors uneasy, right? You've got an election coming up, you've got potentially things heating up in the Middle East, you've got all sorts of issues at Libya and oil. Nobody was expecting that to be part of the conversation. So I think that there are a lot of things that are difficult to parse and to look for what's going to happen in the future. At the same time, you're at a market that's back to almost all-time highs. So I think that it's difficult to see what's coming down. If you see anything nervous, I think that you can see why investors might be. But right now, it just looks like we are gliding through that Goldilocks path. And I think that that's, we're all hoping that that's the case.
If you were calling for an emergency rate cut about a month ago, is it fair to say you lost a little bit of credibility? That really felt like a pearl clutching moment. But you mentioned all of those big risks out there, geopolitical risks, for example. How do you hedge that? It feels like that, of course, is always the question, and those hedges never quite pay off like you would expect them to.
Well, it gets back to Sonali's point of what else are you doing now, right? You have to make sure that while you're participating in things like big tech, where the valuations are high, you also have other bets on the table and you're looking at other things. There's a big concern about oil prices right now, but there are a lot of potential exogenous shocks that could drive oil prices higher. We think that the energy patch has some good places to be. You've got some good dividend yields there. You look for places where you've got some really strong cash flow and places where you don't have any kind of balance sheet issues, because right now, that's still where rates go is still an issue. Making sure that companies can cash flow is really important, and making sure that your valuations aren't so high that you're worried about every little tick in the market.
It's interesting. To your point on energy for the year has been lagging. Most of the sector is still up at more than 7% on the year, but only in the last month is when you really saw that catch-up trade. Same with consumer discretionary real estate. So how deep do you dive at this juncture into those sectors that have been unloved, but more recently loved?
They're going to have different different drivers, right? If you're worried about the economy, then consumer discretionary is probably a little bit more vulnerable. If you're worried about the economy, that's also true for energy. But the truth of the matter is we have a lot of investment that still needs to be done. And all of a sudden, it seems like this year people have come around to, well, yes, we need alternatives to energy, but we also need hydrocarbons, that, you know, the older version of energy. And I think that there was this idea somehow that we could completely supplant it, and therefore you didn't have to do a lot of investment and it didn't matter. And I think that that's coming full circle. And there are some places there that even with lower commodity prices, you still have some very good room to run.
Sarah, please stick with us. That is Sarah Hunt of Alpine Woods. And we're going to get a look now at stocks moving at this hour with Abigail Doolittle. Abby.
Oh, well, Sonali, let's start off on two big earnings winners. On the technology side, we have the shares of Ambarella up about 12%. The chip company put up a good quarter. Their guide is much better than expected. Analysts excited about the AI and automotive potential. Box, the internet application software company, up about 9%. They beat. Billings were strong, and investors encouraged by those results. Turning to retail, this is interesting because earlier Foot Locker was initially soaring on what appeared to be a good quarter because they put up comps of up 2.6% versus the comp expectation of up about 1%, the first time that they put up an up comp in about 5 quarters, or after 5 quarters of declines. But now you can see not so much. Investors not really so wowed, down 15%. This could have something to do with the fact that into today, the stock had been up about 46% year to date. So a case of expectations. Kohl's, a really solid gain here, up 5.7%. They've lifted their full year view. There was a profit beat. Inventories are declining. It seems as though maybe some of the shorts are getting out of this stock. There is a 36% short interest on that stock. And then finally, just taking a quick look at the big one. And of course, that is NVIDIA after the bell. This chart is the chart of the week. Right now, down about 1.7%. Another case here of expectations. Will they be able to put up another big blowout quarter and guide? Will it be enough? As you and Sonali, Katie, have been talking about, options suggesting a big 9 to 10% move up or down after these results, which would be very fitting to the types of reactions that we've had in the past, typically to the upside.
All right, yeah, it'll certainly be fun either way. Abigail Doolittle, thank you so much. Now coming up, Kamala Harris and Tim Walz scheduled to give their first joint interview on CNN this week. We'll take a look at what else is making headlines around the world next. This is Bloomberg.
You have retailer Abercrombie and Fitch beating sales expectations for the 6th consecutive quarter. But it wasn't enough to impress investors, of course, in a sector that is waiting for more. The stock down about 15% this morning. We're going to get a closer look at the retail sector because, of course, you're seeing more of this type of movement. Bloomberg's Abigail Doolittle is here to join us.
Well, let's start off with the macro cause as opposed to looking at just the effect, because, of course, a lot of this goes to the inflation picture also coming out of the pandemic. So this is CPI less energy and food, and you can see back in 2020 just above 1% or so, and then at the peak in 2022 in the 6% range. Again, this is ex food and energy, now down well below 4%, closer to 3%. You would think that this decline would really give consumers a bit of a boost in terms of spending power. That's not entirely the case, though. If we take a look at retail sales this year, yes, for the most part, good, but a little bit lumpy. We have had a couple of months of declines, most recently in July, up just 0.3%. So a gain, but one of the smaller gains, in fact, the smallest gain that's actually a gain of this year. When we put it together with stocks, well, there's such a mixed picture for all these different consumer stocks. Abercrombie and Fitch, while maybe down today, despite the good quarter and boost, this is a piece of why it probably is down, because take a look at on the year, even with today's 15% decline, still up 59%. And when we put that into the perspective of American Eagle, Urban Outfitters, and Gap, you can see, Katie, that folks are out there shopping for clothing. Abercrombie and Fitch, though, clearly outperforming.
Yeah, the big leader, of course, in the sector, even with today's downdraft, of course, maybe a case of high expectations there. Abigail Doolittle, thank you so much. And for more, let's continue this conversation now with Fran Horowitz. She is the CEO of Abercrombie and Fitch, joining us again on Open Interest. It's great to have you, and I want to go straight to the outlook, because you mentioned that increasingly uncertain environment for retailers in the statement earlier today, but at the same time, raising the full year sales outlook. So square that circle for me. How do you plan to navigate through that period of uncertainty?
Hey, Katie, we're going to continue to do what we've been doing. We just put up an incredible first half of the year, record Q1, record Q2, double-digit increases, a double-digit in every month of the quarter, in fact. And we're thrilled with the start to August. What I tell the teams all the time is we got to stay focused on the customer, control what we can control, and that's what we've been doing. The customer always has a choice on where to shop, and they are choosing us.
Well, let's talk about what you can control, of course. You can't bring down the rate of inflation, but you can bring down your pricing. You can boost promotions. We've heard a lot of retailers also warn about the second half of the year and that stretched consumer. How would you characterize the level of promotions that you're planning relative to maybe past quarters and past year ends?
Yeah, our promotions are under control. They're less than they were last year. We've had double-digit increase of our AUR since 2019. Our product acceptance and our inventory control is really what's driving our ability to make sure that we continue to drive the AUR growth that we have seen. We do go into every quarter with the expectation of keeping it flat, and then the customer votes. It helps us understand, what they're willing to pay. And again, as I mentioned, you get that product voice and experience lined up like we are, and the consumer is ready to buy.
It's fascinating. I'm really curious about your conversations with investors, Fran, because if you look, yes, it's been a little bit less of a gain over NVIDIA over this year, but still over a 12-month basis. Your stock has been expanding at a faster rate than even the most beloved tech giant out there. So you have a traditional retailer expanding at the rate of a technology company. What is it that investors really expect of you at the end of the day? And how do you really define to them what you grow as a retailer?
Yeah, I think what they're expecting from us is what we continue to do, which is deliver. We've spent a lot of years transforming this company and really rebuilding our operating model. And we've spent time and time and time again with the investors really explaining and helping them understand what all of that means. And they truly understand what that means. Obviously, evidence in the stock prices you guys just illustrated over the past year. So what that means is staying close to your customer, making sure that we're reading and reacting to the business, having financial discipline in how we control our inventories. It's a new way of thinking about retail, and our operating model continues to drive results.
How are you also thinking about partnerships? During the call, you were talking about, for example, your NFL partnership. What does this really bring to you at the end of the day? Is it new customers? Is it more customers? And what kind of cost does it come at?
You know what? It's a little bit of both. It's been very exciting. I like to say we are no longer a jeans and t-shirt company. We're certainly a lifestyle brand, and we hear from our customers what is important to them. So a great example is the NFL partnership. We started this partnership about 3 years ago. We tend to do things small and then build on them as they work for our consumer. It's a real test and learn culture that we have here. The NFL is a fantastic example of that. We now have all 32 teams. We've got expanded product categories last year, mostly focused on fleece and t-shirts. Now we have outerwear and hats and sweaters. The collection is off to a great start. And if you look at our Hollister brand, same thing. How do we expand that consumer's product categories? And we just launched a terrific collegiate assortment, over 30 universities across the United States. And again, off to a great start with that. It's really helping drive our strong back-to-school performance.
And I also want to talk about geographic footprint as well. I'm taking a look at the notes you sent over to our producers. You plan to be a net opener of stores next year. What areas of the country are you thinking about there when you take a look at your map right now?
Yes, so we are actually going to have almost 120 new experiences this year, twice as many as we had last year. And to your point, it's our third year of being a net store opener. Those reference stores actually around the world. So it's our global footprint that we're looking to expand, both through the Abercrombie and the Hollister brands.
And I want to talk internationally as well. There's some news on the terminal out today that Abercrombie and Fitch has plans to return to Hong Kong 8 years after you shut down your flagship store. According to people familiar, the plans are to rent 2 large stores in prime locations in Hong Kong. Are you able to confirm those reports?
So we have stores in Hong Kong. So we saw that earlier this morning. We sent in a correction. So we're not returning to Hong Kong. We are currently in Hong Kong with several stores. We are in the APAC region. As I mentioned earlier this morning, we saw a 3% net growth and a 21% comp growth throughout that region this year.
You mentioned something earlier, Fran, as well, that I want to go back to for a second here. This back-to-school moment that many people are having. You were talking about the NFL partnerships, not just back to school. It's back to watching football. I think this weekend is a lot of the first big games, or next weekend. I'm still learning my football lingo. But what can you tell us about the demand that you are seeing headed into this fall season? A lot of people out there worried about the consumer, but this is a critical time to sell.
Yeah, listen, we were thrilled with the beginning of August, which I mentioned this morning. We have momentum coming out of the second quarter, and it's remained into the third quarter. To your point, the NFL is certainly driving a piece of that. It's one part of our business, but it's just only one part. We're also seeing tops and bottoms selling. Our dress business remains strong. The wedding shop that we talked about last time we were together has gained momentum, and those weddings honestly go all year round now. And then as far as collegiate goes, same thing. Exciting to see that consumer. You know, they start freshman year in high school, start thinking about aspirational places that they want to go to college. So another good opportunity for us to connect with the consumer.
Fran, the other question I have here about Abercrombie and Fitch, of course, Abercrombie and Fitch, Hollister have been two iconic brands for a very long time. You've certainly reinvigorated it in a pretty massive way. But do you see A&F having more brands? Do you see yourself expanding into even more categories, perhaps even through the means of mergers and acquisitions, given how far your stock has come as currency?
You know, our focus today is on investing in the business, and that's our number one plan for our capital allocation as we continue to do. We're currently making some very big investments in the business, from digital and technology, the stores piece that you asked about earlier, investing in opening and transforming our stores as well. We will continue to stay close to that customer to understand what they're looking for. You know, YPB is a great example of a brand extension. That's our performance brand under Abercrombie and Fitch, called Your Personal Best, which I'm seeing on the screen right now. You're showing lots of pictures of. So again, it's staying close to the customer and listening to what their insights are telling us.
I want to talk a little bit more about technology investments in particular, because we're all awaiting NVIDIA earnings after the bell. You can't get through a conversation without talking about AI. And when you think about your own investments, has Abercrombie started using AI in any capacity, especially when it comes to generative AI, for example?
Yeah, I mean, AI has been a part of our business. I know everybody talks about it like it was just founded last year, but it's actually been something that we've been working with for some time now. There's lots of applications, certainly within our business, that you can use AI for. So we're continuing to explore like everybody else is. We have our own, AI task force to make sure we're staying up to date on what the opportunities are.
To that end, also, I have to say, Fran, I am very, very guilty when it comes to shopping on social media. My Instagram gives me something and I am going to click on it. And so has AI helped you with kind of figuring out what users want more of? Has it somehow made you more efficient? Could you put more numbers around it? And how has that kind of online channel become more important to you?
Yeah, I mean, listen, we have our marketing today is the majority of it is digital, and I would say that we are certainly a leader in social commerce for sure, and in social media and the digital platforms. The data and analytics team helps us understand what the customers are looking for. They relay that to both our marketing and our digital teams to make sure that we're staying up on what's working for them and what's not working for them.
All right, Fran, really appreciate you taking some time with us this morning, and also appreciate the clarification on Abercrombie's Hong Kong presence. Hope to speak to you again soon. That is Fran Horowitz, the CEO of Abercrombie and Fitch. Meanwhile, let's get a check on these markets. Of course, wait and see in full effect. The S&P 500 down just 0.1%. The NASDAQ 100 off by about 0.5% or so. In the bond market, dead quiet. Coming up, the countdown is on until NVIDIA reports after the bell today. We'll speak to New Street Research's global team head of technology infrastructure next. This is Bloomberg.
The world's most valuable chip maker set to report after the bell. Investors are waiting to see if NVIDIA will once again shatter sales expectations powered by its AI computing processors. Analysts are predicting revenue growth of more than 70% for this quarter. For more, we're joined by Pierre Ferragu, global team head of technology infrastructure at New Street Research, and he has a buy rating on NVIDIA with a $148 price target. At the end of the day, yes, there are high expectations for this quarter, but there are also high expectations for going into 2025. If anything looks softer than expected, if they were to project a hint of uncertainty around that forward look, what would happen to the stock?
Yeah, that's really the risk with NVIDIA. You have to be very careful about where expectations are and how much room the company has to beat. And so what happened in the last few weeks is that a lot of negative news flow came from Asia, talking about difficulties for NVIDIA in the ramp of their new product generation, the Blackwell generation. So that created a bit of like a bit of a nervous sentiment. People got worried about, whether NVIDIA would be able to ramp the new product. And I think it's setting expectation in a place that is rather satisfactory, because the reality of what's happening today is that people want way more GPUs than NVIDIA can have manufactured anyway. And so if you have like a next generation chip that cannot ramp as fast as initially anticipated, that means you'll continue to produce the previous generation chip, the Hopper generation, longer and in larger volumes. And so what I would expect is the company to be very reassuring on the call tonight. I think it's easy for them to make the numbers that are expected for this quarter. They're probably going to guide where expectations are, which is going to be interpreted as a positive. And most importantly, on the conference call, we think they're going to reassure the street on the ability for NVIDIA to ramp the new products. We're probably a few weeks behind our original schedule. And that in the meantime, the previous generation product line is going to continue to do extremely well.
How big of a deal, Pierre, is that Blackwell delay at the end of the day? And what does it mean for the future of NVIDIA?
It is actually, to be honest, Sonali, a non-event. I mean, you have to realize that NVIDIA is at the leading edge of on many dimensions. They're producing the largest chip in the world at a very advanced nodes, and they've accelerated a lot the cadence at which they bring next generation chips to the market. So all that is a lot of pressure for them. And you have things that work well when you produce 1,000 chips or 10,000 chips. And once you've produced 100,000 or 500,000 chips, then you realize you have a problem and you have to slightly rework your design on one of the elements making the chip. It's called an interposer between two silicon dies. And that's what they are doing at the moment. They have an interposer that doesn't work as well as they would want it to work. So they take 6 to 8 weeks, maybe 10 weeks to redesign it and get back into production. And the ramp is going to be slightly slowed down based on that. And so when they do that, it's not a big deal, but they have to let their suppliers know. And, things have changed. We're going to be a bit delayed. We'll have to redo this and redo that. And that creates a lot of noise, a lot of negative vibes. And we end up making a lot of noise, but it's much ado about nothing at the end of the day.
All right, so a non-event there when it comes to the Blackwell story. Appreciate that insight, since it feels like one of the few elephants in the room when it comes to NVIDIA's report later after the bell today. The other elephant in the room, of course, is how long the momentum can stay behind NVIDIA, how long they can hang on to that sort of first mover advantage, that incumbent advantage, whatever you want to call it. You see some of their competitors, AMD, et cetera, making acquisitions to try to catch up to NVIDIA. How long do you think that the chip maker's lead can sustainably last here?
You're absolutely right, Katie. That's really like probably the number one question on NVIDIA, along with how long are NVIDIA's clients going to continue to increase their spending on AI infrastructure? And so on your question, I would tell you, AMD is on fire. They're doing extremely well. They're coming up in the market with a very decent alternative to NVIDIA. But, when you sell for $1 billion of chips every quarter, and you've been doing that for very recently, like you've really started ramping volume 9 months ago, you have a very small community around you, a very small number of people using your chips, deploying them. So you're not anywhere near the market power of NVIDIA that has like a gigantic ecosystem with like 100 times maybe more people working on their chips and who have been working on these chips for like 25 years or even before AI really existed. And so AMD is catching a fantastic opportunity. As I told you, people want way, way more GPUs than can be produced. So AMD is being very successful, is becoming an alternative to NVIDIA. But there is no line of sight on NVIDIA losing its leadership. It's like a dominant leading role in the industry. You can look at another example. The only real alternative to NVIDIA today is a TPU, a chip designed by Google and used only internally by Google. Today, the TPU is shipping in millions, but it took more than 10 years. Google started working on the TPU in 2012, more than 10 years to get there. It's a long road, you know, to compete against NVIDIA. So I think they're going to keep their market leadership as long as they continue to execute very well.
And Pierre, we have several opportunities to hear from, of course, Jensen Huang tonight. We have the earnings call, and then we have Bloomberg Television's exclusive interview hosted by our own Ed Ludlow. What do you want to hear at this juncture? What questions are you and markets asking right now when it comes to NVIDIA?
Yeah, I think what I would love to hear Jensen comment about is how he sees, you know, the industry getting into like a normal, sustainable run rate. As you said in your initial comments, we're expecting NVIDIA to grow revenue 75% this quarter, and we're already expecting them to grow revenue like almost 60% next year. And you can't grow 60% a year forever, right? And so at some point, we'll have to see things like lending getting more sustainable. And I'm truly wondering whether Jensen has visibility on that already, if he gets a sense, or, you know, whether we'll continue to have like extreme growth in 2026, or whether 2026 will be a year of normalization. Now, all the questions are about 2026 to me. 2025, we have relatively good visibility on what's happening, because we know people have already ordered and are waiting already for the new chips to come through. So the real question is, what happens in 2026?
Pierre, we thank you so very much, of course, for working late in Paris. That is Pierre Ferragu of New Street Research, all over the biggest event of the week, NVIDIA earnings after market. And tonight at 6:30 p.m. Eastern, do not miss a special edition of Bloomberg Technology featuring that exclusive interview with NVIDIA CEO Jensen Huang. All eyes will be all over it. Stick with us. This is Bloomberg.
All right, let's get now to the trading diary, what you need to be watching this week. And of course, at the top of the list is NVIDIA earnings. We get those after the bell today. This market really on tenterhooks in this last trading week of August. We also hear from Atlanta Fed President Raphael Bostic tonight. And then tomorrow, more earnings, this time from Best Buy and Dollar General. That's before the bell. We also get initial jobless claims really in focus as we pay attention to this labor market, and we still digest those payroll revisions that we got last week. And then Friday, another big piece of macro news when we get July's PCE inflation data, obviously a big focus for the Fed as well.
Let's gotta check on these markets before we let you go, because we have the S&P 500 near session lows, about 1/4% lower. NASDAQ 100 near session lows as well, 0.8% lower. Of course, a lot of calm in this market still. Thin volumes before that big NVIDIA event that a lot of people are watching as closely as a jobs report, as you've been talking about. That is very true. But the bond market yet stable ahead of PCE on Friday, and then of course the other big moment is not until next week, that jobs report.
It's fun to think of all the different things you can compare this NVIDIA report to. The jobs report, a Fed meeting, I don't know what else, a presidential election, who knows. Dan Ives saying it could be the most important earnings report in years. But again, Dan Ives, he has a flair for the dramatics.
I do think a bigger moment after that report is even that Ed Ludlow interview with Jensen Huang, exclusive, an hour-long special. And of course, people will be parsing very closely what Jensen Huang has to say about that forward look.
Yeah, big time. A lot of focus there. Don't miss that, of course. That's coming up at 6:30 p.m. Eastern tonight. And coming up tomorrow on Open Interest, pleased to say we'll be speaking to Laura Ray Dickey. She is Dickey's Barbecue Restaurant CEO, joining us in the C-suite. Much more coverage ahead on Bloomberg TV on these markets throughout the day. But that does it for us. This was Bloomberg Open Interest, and this is Bloomberg.